Welcome to Inside India. I'm Amantot Singh and these are your headlines. The Indigo saga continues. India planning strict action against the country's largest carrier, even as Indigo claims its network is fully restored. Indigo shares tanking nearly 10%, dragging down the broader Indian markets. The Sensex posting its worst single-day drop in 2 months. And India's Tata Electronics securing a partnership with Intel, a major step forward in the country's chip-making ambitions. Let's get a quick check on what's happening in the Asian markets. JP Ong is right here with us in the studio. JP, what's going on?
Yeah, well, picture tells 1,000 words. So let's take a look at how the wall is flashing. The flash right now, Amatosh, is red in various tinges. Many markets in the Asia-Pacific region just pulling back in lockstep with the Fed's own overnight losses as we approach or get closer to the Federal Reserve's own decision this coming Thursday morning, Singapore, Hong Kong time. And that's also because while there are expectations the Fed will cut interest rates this coming Thursday, there are expectations that the rate cut path or the pace of rate cuts might slow and become more data dependent, which means fewer possible rate cuts in the future and thus also perhaps fewer reasons for equity valuations to actually be revalued upside. You're seeing here stocks from Sydney, Shanghai all pulling back. The Nikkei 225 showing a slight bit of a rebound today session. And of course, the ASX 200 worth watching because of the RBA's own policy decision in about 29 minutes. They're in the red by about 0.25%. You take a look at South Korean stocks today, and looking at how the chip makers there are faring, you're seeing the likes of SK Hynix and Samsung actually in the red. Now, the South Korean regulators have actually issued a rare warning once again for investors to make sure that they are wary and watch with caution the recent rally of SK Hynix, because over the last 12 months, they've actually surged by more than 200%, and they are worried about a little bit of frothiness and perhaps investment risk that perhaps should perhaps prompt investors to proceed with this particular chip stock with a little bit of caution. And now we take a look at Chinese markets in today's session, also worth looking at, and looking at property stocks, which again are one of the big areas of concern there, and they are one of the leading laggards out in Hong Kong. The Hang Seng Property Index down by more than 2.6%, with continued woes and uncertainties facing the likes of China Vanke and also that of New World Development. So a lot of questions regarding the property sector in China resurfacing and hitting investment sentiment there quite significantly, as you can see from the CSI 300 and the Hang Seng so far today, Amitosh.
All right, JP, thanks so much for that comprehensive understanding of what's going on in the Asian markets. All right, there is one particular stock, though, that's bouncing back up in a sense. US President Donald Trump posting on Truth Social saying he's given Nvidia the all clear to ship its H200 AI chips to China. Details are still being finalized, as is usually the case, but we do know that Washington will collect a 25% fee per chip, and that the same approach will be applied to sales from AMD and Intel as well. The H200 chip is more advanced than the H20 chip, which China has reportedly warned companies not to use. It also falls short of allowing Nvidia's newest Blackwell chip into China. But President Trump says President Xi has responded positively to this latest reprieve. The news sending Nvidia shares higher in extended trade. All right. Now, India's Tata Electronics has also lined up Intel as a prospective customer for its upcoming semiconductor plants, a major vote of confidence in India's chip-making ambitions. Tata is investing $14 billion to build the country's first chip fabrication unit in Gujarat and an assembly testing facility in the northeast in Assam. The tie-up comes as Prime Minister Narendra Modi pushes to position India as a global semiconductor hub. Intel and Tata will also explore scaling AI PC solutions for India, a market they expect will be among the world's top 5 by 2030. The Intel-Tata partnership comes as New Delhi and Washington continue to negotiate a wider trade pact. U.S. Treasury Secretary Scott Bessent says the Trump administration is still working on a trade deal with India. That's the latest. A U.S. delegation also arriving in New Delhi, well, tomorrow, for 2 days of talks focused on trade issues.
The new Deputy U.S. Trade Representative, Ambassador Rick Schweitzer, he will be visiting India on 10th and 11th of December. This visit is a familiarization visit, as also to meet with senior officials in the Government of India. As you are aware, both governments remain engaged with a view to concluding a fair, balanced and mutually beneficial multi-sectoral bilateral trade agreement.
But just hours ago, President Trump saying he may introduce new tariffs on agricultural imports to address alleged dumping of Indian rice into the U.S. Some U.S. farmers saying falling rice prices are due to imports from countries such as India, Vietnam, and Thailand undercutting local crops. So let's just get a sense of how that's playing into the Indian markets, which will come online in about 40 minutes. Gift Nifty futures indicating a bit of a muted start after the steepest drop in more than 2 months in the previous session. Now, caution over the Fed's rate decision obviously playing into the sentiment, and it's expected to be a cut widely now. But perhaps more importantly, those recent comments by Donald Trump on rice tariffs on India. Now, that's created further uncertainty over the trade deal as negotiators from the U.S. come this week. And Indigo's shares falling 10%, perhaps bringing the market down. Remember, we're also watching the Rupee and seeing what will happen with that. It's been sliding, but will the RBI step in? The Nifty this year so far has delivered less than 10% returns, with most of those coming in the latter half of the year. Tariffs and rocky trade momentum with the U.S. have also kept markets on the edge. But despite those returns, Bridgewater founder Ray Dalio finds India as one of the interesting markets that would make for a good diversification play.
I'd be underweighted in debt assets. I'd be overweighted in the alternative money. I would be dealing with the applications. For example, the building of electricity and betting that electricity will go. And then I'd be diversified internationally. I'd be in the good places internationally. India is interesting. A number of other markets are interesting. They provide good diversification benefits.
Well, we've been saying that for a while, right? India is interesting. Meantime, the IPO market, that remains interesting. It's red hot, actually, as we approach the end of the year. 5 main board IPOs open for subscriptions just this week, taking the number of total IPOs this year so far above 100. Proceeds have hit a record high of around $19.6 billion. Investors now will be keeping an eye on subscriptions for ICICI Prudential Asset Management opening on December the 12th. The offering is expected to target $12 billion valuation in what could be a $1.2 billion IPO and the fourth largest issue of 2025 in India. Joining us now to discuss Ray Dalio's comments and the IPO buzz is Amish Shah. He's the head of India research at BofA Securities. Amish, thanks so much for joining us. I appreciate that a lot. Let's just start with the IPOs. There have been concerns around valuations. There have been concerns around what has been reported as uneven returns, with 40% of some 108 firms since 2022, their IPOs trading below their offer price. And domestic investors really caught in this IPO frenzy. So my question to you is, will these domestic investors come out on the positive side?
Sure. Thank you, Amitoj. Good morning. Thank you for having me. So look, on IPOs, absolutely, it has to be looked on a bottom-up basis. Some IPOs with their valuations are attractive and then some are not. Clearly, there is another concern amongst investors that companies after companies are trying to monetize their stake given the higher valuations that India is offering at this point in time. It's a fact that the amount of money that has been raised through blocks and through secondary exits is actually far outpacing the money that is actually coming into the company through this fundraisers in the form of IPO. So clearly, a large part of the fundraisers is not going towards capex. It is not going towards fresh infusion into the companies for growth. It is actually on the back of higher Indian valuations, opportunistic stake sales.
So do the domestic investors come out on the positive side?
So Amitoj, as I'm saying, in some cases yes, in some cases not. So IPO, unfortunately, is not a category that we will broad brush to say that it is a problem or it is hunky dory. I think each issuance will have to be evaluated on its own merit.
All right. Your 2026 outlook, I want to get a sense of that, because you expect 2 strong years for Indian equities starting FY26. Obviously, this is usually contingent on uncertainties, tariff-related and otherwise. But I wanted to get a sense of your emphasis on saying that there is no room for valuation expansion and where you actually see Nifty going by 2026 end.
So Amitoj, we are of the view that Nifty could possibly return about 11-12% next year. This is primarily on the back of earnings growth. you are absolutely right. We are arguing that there is no room for further valuation expansion in the case of India because Nifty is already trading at +1 standard deviation valuations. The only two times in the last 2.5 decades that Nifty has traded at valuations higher than that has been during the times of 20 to 30% earnings growth and a constant earnings upgrade cycle. So there was a very good momentum to earnings a couple of times when we went to valuations higher than that, but we are not in that cycle right now. And as a result, we think that any valuation expansion-led ready will be sold hard. So with valuations out of the equation, the upside for Nifty is going to be purely be dependent on earnings growth. We are expecting about 7% earnings growth in FY26, which is the fiscal that we are in. And we are expecting 14 in F27, which is the next year. And as a weighted average, you get to about 11-12%, which is the returns that we're expecting to the markets as a result.
This is a hard one, perhaps. Will Nifty 50 have zero returns in US dollar terms for the financial year, given what we are seeing in terms of sustained rupee weakness?
So that's a tough one for us as well. And I'm not an expert on Forex, so I'm guided by my global house views. Our house views currently are that Rupee will in fact appreciate by 5% next calendar year. So we are calling for 86 rupees to a dollar versus 90 plus as of now. So indeed, if our house view goes right, then we could possibly add to the 11-12% returns rather than shave off from that returns.
Okay, I know that you're not a Forex expert, but could you tell us a little bit more about why that's the case, that you think it's going to appreciate so much to 86 you said?
So a large part of that is definitely contingent on the India-US trade deal going through, because a large part of the rupee currency problem right now is twofold. One, because of the India-US trade deal being a limbo, there is a current account deficit expansion, number one. And number two, from an equity markets perspective, there is an FPI outflow. And as we were discussing at the beginning, that because of the strategic stake sales, the net FDI of India is hardly positive, because you are getting gross FDI, but there are companies which are taking away money by stake sales. So as a combination of these 2-3 factors is where the rupee problem lies. Next year, arguably, we think that even if you don't get FII inflows, there's a possibility that the FII outflow becomes zero. So that helps. And if the India-US trade deal goes through, then the current account deficit becomes more manageable, and that helps the rupee.
And what if the trade deal doesn't go through and the uncertainty remains? What's the rupee outlook
So
then?
that is definitely a big downside risk, because markets in India has already priced the assumption that India-US trade deal will go through, and as a result. So maybe if I were to put it in terms of numbers, as you know, currently the tariff on India is 50%. Of that 50, 25% is linked to India buying the Russian crude. Now India has already dialed down on the Russian crude, so markets have assumed that 50 going to 25 is a given. And then there is some optimistic assumption that on the back of India-US relationships improving, that 25 could eventually end up at 20 or possibly even lower. So I think markets have currently already priced in around 20% of tariffs. And as a result, if the trade deal goes through, and indeed if we are at 20, then the markets will not have too much upside or downside. If it goes towards 15 or 16, as some bullish analysts argue, then there will be some upside. But if the deal does not go through, or if it gets protracted, then I think that the markets will have a downside. And particularly that downside will be outsized for the small and mid cap stocks, because those are the pockets like textiles, marine, etc. sectors, which are primarily the export sectors to the US. So small mid cap stocks get hurt more, and obviously that will have an implication on the rupee as well.
Okay, let's talk about sectors. Thanks so much for digging into that. But you've talked about how you feel, there is earnings is the focus, but how that plays into the sector-wise preference you have is fascinating for me. Can you dive a little deeper into that while also keeping in mind that there is this assumption that is in the calculation that there will be this end to earnings degrowth?
Sure. So, look, Amitoj, on earnings, first of all, I would say that we were very conservative on earnings in this calendar year. So when we started this calendar, we were expecting only 7% growth for earnings in this fiscal. The consensus was expecting 22. As the year has progressed, that 22 for consensus has now come down to 8, and we are at 7. So, so we were at 7, we stayed at 7, consensus 22 has come down to 7. And if you look at the first half earnings growth for India, it has been around 8%. So I think 7 to 8% is absolutely possible for India to deliver, especially in an environment where the nominal GDP growth is close to 9%. So generally, corporate earnings for the large companies are better than the nominal GDP growth. So we are in fact arguing for a shade lower. And that's a top-down way of thinking about it. But obviously, we are going bottom-up company by company. And we think that there are drivers for companies to be able to deliver 7% growth. Now, next year, when you look at the base of 7, obviously that base is quite muted. And therefore, the base helps, especially in sectors like IT and staples where the growth is going to expand. And then there are bottom-up sector-specific nuances, like let's say the financial sector, which is the biggest sector by weight. All through this year, that sector saw earnings decline or earnings cuts because as the RBI was cutting interest rates, that meant NIM compressions for banks. But we are now at the fag end of the rate cuts. And as a result, the NIM compression story is over. On the back of lower rates, we are now going to see an acceleration of loan growth and that driving earnings growth. So sector nuances like those, on a bottom-up basis makes us believe that 14 next year is possible, and this year's earnings cuts have now bottomed.
Okay, fascinating. There's a talk after the RBI's decision for a rate cut around transmission, that how the transmission of the rate cut actually plays out will determine the next rate cut. But there are already economists suggesting that there is a chance of another rate cut in the next one. Have you factored that in to your calculation when it comes to sectors?
Yes, we are factoring in one more rate cut in February of next year. And I believe, that is more or less a consensus view as well. And therefore, to my earlier point, in the rate sensitive sectors, like financials or real estate or REITs, etc., one more rate cut is already priced in earnings as well.
Okay, fascinating. Can you give us a sense of the aviation sector? And I only ask that because we're going to bring up this graph of Indigo. There's also Akasa Air, which is quietly prepping for an IPO. Indigo stock down about 10%, and the crisis in India making global headlines. What's your take on Indigo stock?
So, Amitoj, I won't be able to discuss specific stocks, unfortunately, but on the broader travel and tourism sector that includes airlines, hotels, travel booking portals, we are optimistic. So clearly there are issues around the new flight, the pilot rules, their duty hours, etc., and that has led to some issues. But on a structural basis, when we look at it, for a variety of factors, so historically, if you look at any market globally, the moment per capita incomes go over $3,000, there is generally an inflection for people to spend on discretionary and experiences. India is currently at $2,900 per capita. So we are at the cusp of that. So that's number one. Number two, there is a massive undersupply of hotels in India. And there is a massive demand for people wanting to travel for experiences and holidays. So and obviously, as you understand, there is a gestation period to build new airlines or new hotels.
Right.
So I think the demand supply equation stays in the favor, and travel and tourism as a sector, structurally, we are bullish.
All right, just your quick view on AI. We're completely out of time because we had Matt Orton, Chief Market Strategist of Raymond James Investment, basically saying that to diversify global portfolios, you should think about India because it's a relative underperformer and it's not levered to AI. Is that a good thing or a bad thing is what I'm not clear on.
Again, from a long-term structural growth visibility perspective, India not in the AI innovation race is a worry, and that is reflected in the IT sector, where bulk of that pessimism or concern is already priced into the space. We are still bearish or underweight on the IT sector despite the correction. If the question is that there is already a debate going on in the US, that is there an AI valuation bubble for the for the tech stocks in the US, then in case if the US markets were to see a correction on the back of that, then India will relatively outperform the US, given that we don't have an AI trade that will get impacted.
That's exactly what the question was. Amish Shah, thank you so much for taking all those questions so beautifully. Amish Shah from BofA Securities, appreciate that. Thanks so much for joining us. A little bit of a glitch for Elon Musk's Starlink on Monday. The company says its India website isn't live yet and that no prices have been announced. This after reports emerged around the pricing of Starlink's monthly residential plan for Indian customers. A company VP clarified on X that a technical glitch briefly made dummy test data visible online, sparking confusion. Starlink says those numbers do not reflect what the service will cost in India. The company adds it's still waiting for final government approvals before taking orders or switching on service in the country. For now, the website continues to show pending regulatory approval for all Indian addresses. More news and updates coming up right after this short break. Don't go anywhere. Welcome back. This is Inside India. Now we're tracking some particular stories. Let's give you a sense of which ones. The first, the IMF has approved Pakistan's latest loan review, unlocking 1.2 billion and keeping its bailout program on track. The funds are part of a 7 billion package and come as Pakistan works to rebuild reserves, cool inflation and push through tough reforms, including raising revenue and privatizing state-owned companies. The IMF says Pakistan must maintain strict monetary policy and accelerate structural reforms to secure long-term private sector-led growth. Also, India is demanding assurances from China after an Indian national was detained for 18 hours at the Shanghai airport last month. New Delhi says the woman was told her passport was invalid because she was born in Arunachal Pradesh, a region China claims as its own. India says such actions undermine efforts to rebuild ties. The Foreign Ministry is also advising Indians to exercise caution when traveling through China, even as both countries work toward a cautious thaw in relations after years of border tensions.
We expect the Chinese authorities to provide assurances that Indian citizens transiting through Chinese airports will not be selectively targeted, arbitrarily detained or harassed, and that regulations governing international air travel would be respected by the Chinese side.
Now, tensions also reigniting between Thailand and Cambodia. CNBC Southeast Asia reporter JP Ong is right here with us and has all the details. JP, what's the latest?
Yeah, another border skirmish this time and closer to this part of the world, with Thailand conducting airstrikes on certain Cambodian military installations. Now, unlike other times, it seems that the reason now is more blatant and even more concerning, because the Thai military has come out and said actually that the objective right now, Amitoj, is to cripple Cambodia's military capability for a long time to come. Now, on the Thailand's part, they are accusing Cambodia of repeatedly violating the peace pact that they signed in late October on sidelines of the ASEAN summit by saying that they continue to plant landmines that are responsible for injuring and maiming and even killing Thai civilians and Thai soldiers. They've also accused them of conducting drone strikes on certain Thai military bases and positioning rocket launchers pointed at Thai civilian targets, which they say might be deployed in the coming days, which is why they've had to act. In fact, the Thai Prime Minister has said that there will be no talks at the moment, and said that if Cambodia wants to return to the ceasefire terms, they have to publicly apologize to Thailand for all of those actions. Now, Cambodia, as expected, has said that they are denying that they actually conducted these, and is now actually accusing Thailand of actually violating and committing acts of aggression against Cambodia, which they're asking the international community to condemn. Now, we've heard from the international community as well here in the last 24 hours, Amitaj, the Secretary General of the United Nations, Antonio Guterres, saying that both sides need to come back and de-escalate tensions at the moment. Prime Minister Anwar Ibrahim of Malaysia, who is one of the key architects, actually, or one of the key brokers of that peace deal in October, also calling for constraint. And we've also heard from the office of the U.S. President Donald Trump. He says, according to a statement, they say that the American president says that he expects the governments of Cambodia and Thailand to fully honor their commitments to end this conflict. And by honor those commitments, they're also linked to some of the trade pacts that they both signed to make sure that tariffs can come down to 19%. So if the conflict continues, we might also see perhaps a complication of any trade talks by Thailand and Cambodia with the United States. Of course, the most important thing here is that we see violence come down, we see the acts of aggression come down, because we have seen thousands of people displaced now, and a lot of people losing their lives, Amitaj.
All right, thanks so much for that, JP. And we'll have to wait and see whether President Donald Trump can claim that he's the brokered peace in one more region. Coming up after this break, we'll take a look at Indigo's massive flight disruptions with the president of the Federation of Indian Pilots. Stay tuned, we're on the runway. All right, welcome back. We're tracking a number of developments coming in right now, but we're counting down to the market open in India for now. This is how we are shaping up. All right, we'll come to that in just a bit because we have breaking news. The Reserve Bank of Australia has done what was expected. It is an unchanged rate decision. That is what we know. The Australian markets had already fully priced in this kind of a development that they would hold at 3.6%. That's exactly what's happened. It's December meeting, the last of the year. So much of focus was really on forward guidance, and that's what we're expecting any minute now from Governor Michelle Bullock. We will be looking out at that. The Reserve Bank of Australia, remember, in the last decision had actually gone ahead and cut. At this point in time, you can take a look at how the Australian dollar is looking compared to the US dollar, that relationship. Interesting developments, a lot of movement, fluctuation happening as we speak. Obviously, let's just also make sense of what's been going on in terms of the data calculations that have been coming in from the RBA and from other data sources within Australia. Since the last board meeting in November, hotter than expected inflation figures and solid economic growth have seen some forecasters going ahead and predicting that next move, that it would be keeping that cash rate on hold at 3.6%. That's what it's done. We'll be tracking this development and coming back to it for more in just a minute. But let's just dive back into what's happening with the Indian market. What are we expecting later today? There's been a lot that's been taking place in terms of tariffs, the RBI, the Rupee, but at this point in time, it looks like a bit of a muted start. 25,968.50, that's very muted. We've seen a jump of about 200 that GIFT Nifty has indicated in the past couple of days. But at this point, it's almost in line with the closing of yesterday. And remember, we had 2-month low yesterday in terms of a single day drop. And that is what Indian markets are indicating at this point in time. Well, we're watching one particular stock related to Indigo, the owners of Indigo, that stock in a bit of a bad spot, 10% down, and we're watching that fall out because of Indigo's slew of flight cancellations, completely unexpected. CNBC's travel and transport reporter, Monica Petrelli, has the latest. She's right here with us. Monica, you've been reporting this out, tracking the daily developments, the hourly developments, really. Can you give us a sense of what's the latest right now that could paint a picture that is slightly brighter than what we've been seeing, which is completely foggy like Delhi's pollution?
Yeah, so yesterday, the government was waiting for it, we were waiting for it, but we got Indigo's response to the show cause notice that was issued by India's Director General of Civil Aviation. And in it, Indigo saying while it was profusely apologetic, it was impossible at this point in time to pinpoint an exact cause as to what led to the mass cancellations that we've seen this week. And it also reiterated its position that a multitude of factors really at play here. Everything from weather to technical glitches to, yes, those updated crew rostering rules. But while government seemingly saying this simply not good enough. We see the Civil Aviation Minister, Ram Mohan Naidu, saying not only is strict enforcement on the way, but that our authorities are prepared to use this incident to set an example to other airlines going forward. Have a listen.
We are doing an inquiry and we will take very, very strict action, not only for this situation, but also as an example. We will set an example for all the airlines. If there is any miscompliance, any non-compliance or non-adherence, for any single person, any entity or any organization or any operator functioning in this civil aviation.
All right. Joining us now with Monica is Captain C.S. Randhawa. He's the president of the Federation of Indian Pilots. Monica and I, sir, will be speaking to you. Thanks so much for joining us on this. I just want to get a sense very quickly, sir, of what you think of the aviation minister's comments in Parliament. What kind of action is possible, really?
Good morning. First of all, thank you for inviting me on the CNBC International, and thankful to Amitosh and Monica. Well, first and foremost thing, let me take you back slightly regarding the FDTL CR, which India had come out in January 2024. This was scientifically made CR for the duty rest times for the pilots, which was long awaited. And after a lot of scientific studies, the DGCA came out with the CR. However, all the airlines they were apprehensive to implement the CR. So it kept dragging on. In March they met, April last year they met, and it would not get implemented. Subsequently, we were in the High Court, Delhi High Court since 2023, and before that, since 2019, regarding a new CR for FDTL. So we knocked the doors of the court and we said to expedite, because it is a safety matter and it's a concern and it should be implemented. So thereafter, the court gave a decision on 7th April 25 to implement the CR. Now all the airlines were invited to again give a roadmap as to the implementation. So the airlines agreed that this 15 clauses out of 22 which were changed should be implemented on the 1st of July and the balance 7 on 1st of November. There were no cancellations or delays by any airlines during the first phase. The second phase also started. And once the second phase started, airlines went running jump because it involved some night operations and asked for dispensations. Some dispensations were granted by the DGCA, especially for in the forthcoming winter season and fog. So once they were given this dispensation, again there were no cancellations. Then on 28th of November, EASA and the Airbus industry came out with an emergency airworthiness directive asking for a software update on the Airbus 320 aircraft family, and 200 of aircraft of Indigo were affected. Within 1 day, 1.5 days, all the aircraft, the softwares are updated. Again, there was no cancellation. 1st of December, again, there was no cancellation. There were some delays. Now, from 2nd December onwards, suddenly there was a spurt of increase in the number of cancellations. It started with 150 and went into the peak of 1,500 flights, which is almost leading to 75% of the scheduled cancellations. And even till yesterday, even after intervention of the government and giving a full leverage to the airline, still yesterday also there were more than 500 cancellations. Now, I'll put across that since the 2nd of December, the Federation of Indian Pilots has been saying repeatedly that the aircraft are on the ground, the crews are available, and the flights are not going. So this is nothing to do with weather. At present, there is no weather condition set. The weather is very good all over India. So it is not the weather. And the reply also of Indigo, I challenge that. The second point is...
And Captain, if I could ask, so thank you for laying the context. This is years in the making, is what you're saying. So is it your position that Indigo had full information that these rules were coming? There were no surprises from November. So is it your contention that it simply didn't act to prepare for what was obviously on the way, these rule changes?
Monica, almost 24 months were given to the airlines that this is coming. And if you see the crew figures, they have approximately only 65 captains short for the operations. And that too, if I take the number of aircraft which are not serviceable and they are not operative, then they have no shortage. So this is a bogey they're calling the crew shortage, the FDTL issues, and they carry about 67% of the domestic traffic. So they were able to bulldoze their way and get a waiver of the entire CR to be held in abeyance, which is very weird that in a country, all the airlines are adhering to the CR or rest for the pilots. And Indigo pilots, we go back to the old system of the CR, and this leverage has been given to them up to 10th of February. So what I'm saying is that though they had made references to the DGCA that they may have a problem, but they never spelled out. Moreover, what is the root cause is that they were integrating the network planning software with the crew rostering software and incorporating the new rules, and they had planned it from 2nd of December. So they had known what is going to happen, but they never disseminated neither to the public nor to the government. Secondly, they had got 7% increase in their winter schedule operations. Now, when you knew that you are going to have a problem, may have a problem with the crew, then why extra schedule was taken into the winter schedule when you know that the winter operations will start, there'll be fog, there'll be diversions. Why enter that arena with 7% increase? And the DGC approved that 7%. That is the beauty of it.
From your position, do you believe that accountability lies with both Indigo as well as the regulators?
Maximum, Monica, that the accountability lies with the airline, because government job is not to interfere in the working of the airline. It's a private entity. They made a mistake, I would say, in approval of the winter schedule, which is based on actually the winter schedule. Any schedule, winter or summer, is put up to DGCA 3 months before the commencement of the season, and that is checked against the number of aircraft you have, the air crew you have, the ground manpower you have, the slots you have, the parking stand you have. Everything is taken into consideration, and then only the schedule is approved. And schedule is approved at least 3 weeks in advance from the beginning of the season. So this was all done.
How do you feel about the exemption, this temporary exemption for some of these rules said to end in February? Do you believe that there'll be another exemption then, or because it's kind of difficult to hire pilots rather quickly, is it not?
Monica, as I said, they're hardly short of 65 captains. Now, 65 captains, we had given a suggestion to the government that what you need to do is cancel the extra flights which you have given to Indigo Airlines in the winter schedule, which are 150 flights a day. So those flights can be allocated to the other airlines who can absorb it. And they will have no problem in the amount of pilots, because at present they have got total 5,800 pilots for 413 aircraft, out of which 47 are ATR aircraft. So even if you go by a ratio of 1:7, captains and 7 first officers, that is 7 sets, so 14 pilots aircraft, and you can easily manage even in 6.5. So with night operations 7, you are very comfortable. So they are short by 65 pilots. So in case these this extra flights are taken off and given to other airlines, it will solve the purpose. Secondly, nowhere in the world you would find such a situation occurring where a regulation or a rule is made and it is dispensed with.
Okay, so I just want to understand, sir. I just want to understand, why did this happen then? And I'm not, you're saying that Indigo has purposefully done this in a sense, and you're also indicating that, you know, the government is not entirely responsible, but at the end of the day, implementation by a regulator is a key. I want to understand another thing, because it's been called a tech glitch, and there's reporting from Bloomberg that talks about Indigo's operations unraveled based on conversations with 6 people, and they are not referring to anything to do with some purposeful, you know, act by Indigo. They are actually referring to what is a tech glitch. They're also referring to a lack of several severe underestimation of redundancies that they didn't put into place. So the question is about proof. Where do you have the proof to actually make this point that Indigo knew exactly what it was doing and still went ahead and did it in terms of perhaps trying to strong-arm the government?
I have got justification. I want to answer your question. All the aircraft were available on the ground. The crew were not scheduled. There was a major glitch in the software system. They were trying to schedule crew who's sitting in Calcutta for a flight in Delhi. There was a total mismatch. Had they done this exercise of, supposing they were doing this exercise from 2nd of December, which they had planned for integration of the software system and updating them, what they should have done, they should have had a manual backup. It wouldn't have led to this chaos. They did not have a manual backup. So it is absolutely absurd of any other reasoning. Even today, the flights are getting cancelled. Minister waived off the entire CAR for them on Friday. We are on Tuesday. Still, the flights are getting cancelled. Right. Aircraft on the ground. Crews are available.
Yeah.
So every part of what, except one thing which they have agreed, and Indigo, that there is a software glitch. That is the main reason. 99%. Rest is all bogey.
Okay. Thanks so much for that, Captain C.S. Randhawa, President of the Federation of Indian Pilots. We'll have to wait and see whether the Indian government actually thinks about slicing Indigo's duopoly or monopoly down, Monica, from 65% that can, prevent India from coming to a grinding halt in similar situations like this. Thanks so much for that, Monica Petrelli, also with us for this particular discussion. All right, we are going to be taking a bit of a break. On the other side, the Indian markets have joined the trading day. We'll take a closer look at what's going on. Welcome back. The Indian markets coming online. The Nifty 50, well, you can't say muted. It's down almost 0.5%. We've been considering this, and remember, GIFT Nifty 50 had also indicated that it would be a muted start, but there have been latest developments coming in from the US. Donald Trump making that point about potential tariffs on Indian rice. That's the latest, and this even as negotiators from the US are coming to India tomorrow. That's playing into the market sentiment perhaps, but also there's caution because the Fed is expected to go ahead and cut rates on Wednesday, US time, Thursday morning, Singapore time. There's a lot happening. We're watching all of that, and whether the Indian rupee can go back below 90, strengthen itself? That's the big question. At this point in time, it continues to weaken. And, it's at 90.02. It was, at the end of the day yesterday, moving around 89.8 and 90. And that's the area which feels like a psychological barrier that's been broken now. 90 is the resistance area now, it seems. And we're going to have to see whether the RBI actually intervenes. Now, we're watching a couple of different elements of what's going on with the Indian markets, but let's talk more about what's happening in the Indian markets with Vivek Sharma. He's the head of international business, asset services and private wealth at Nuvama Private. Thanks so much for joining us right here in Singapore, Vivek. You're here in Singapore because, you're making a big push towards Singapore. You've already made a push, I believe, last year in Dubai.
Yes.
Give us a sense of this, because there's high capital gains tax in India, and wealthy Indians are either leaving India because of the capital gains tax or because they want to diversify their wealth. And they're going largely to Singapore and Dubai.
Sure.
But which is it? Is it because of the high capital gains tax or because they want to diversify their wealth?
Thanks, Amitoj, first of all, for having me. See, what we at Nuvama Private are going after is a far more structural opportunity that we see. Because Indians, if you see, Indians, onshore-based Indians are largely invested in onshore rupee assets. Now, as India is becoming a larger economy, we all track and witness the growth of wealth industry in India. There is a structural need amongst Indians to look at diversifying their investment needs. So when I say diversification, what it means is there is an element of diversifying into other broader global asset classes, be it equity, fixed income, real estate, and the ways and means of going about it, right? So for Indians, both Dubai and Singapore offer distinctive advantages and equally attractive opportunities. But what as we at Nuvama Private are actually going after is a far more fundamental and not a tactical opportunity that we see from our prism, which is a more long-term structural needs, like is the need for any global wealthy individual or families, right? Mm-hmm. Where they need to park their money, invest in global asset classes, global investments, and we see the same playing out in India as well.
Why do they need to park it globally when India is the fastest growing economy, developed G20 economy?
Yeah.
Everyone from Ray Dalio on our show is saying that India is the place to watch out for. Why go to Singapore and Dubai?
And definitely, and I'm saying definitely India is and will continue to be the place. What we are seeing is just the need to diversify. What's happened largely in India because of capital controls and other reasons, most locally based families and individuals have both their business interests and investment needs fully invested only in India. Mm-hmm. So we are not saying that money in India or allocation in India will reduce. What we are witnessing is the need to also diversify to other currencies, other asset classes outside of India.
But if they are going outside of India, will it not reduce?
No, so I'm saying, like you will say, like you and I both invest, and I'm sure like with any individual, when you are creating an asset allocation, right, you want to have a mix of asset classes which are less correlated.
I don't discount that. All I'm saying is that if you want a mix of allocation of resources, and that's perhaps the better global strategy, at the end of the day, the money that was going into the Indian markets will eventually go into other markets. That's all I'm saying. Is that a fact?
Yes and no. So what will happen is Indians will look to diversify, right? And that may be 5-10% of their overall allocation. Yet at the same time, the other interesting trend that will happen is global families who have historically not been exposed to India as much will get a play to participate in the India story through players like us.
Okay.
So we at
I just want to understand that. Are you suggesting that there are global families in other parts of the world, not necessarily in India, who are coming to Singapore and Dubai, or from wherever they are, investing into India because of people like you?
Definitely. And we are not the only ones talking about India. See, today, India at $4+ trillion economy. India, we feel, deserves merit through merit and allocation in anybody's portfolio, right? So if you are today a global family, whether you are an NRI or a non-NRI family, I think India as being one of the top 7 economies in the world, deserves an asset allocation.
Okay. You have you're serving about 4,500 plus families. You manage about 26 billion in client assets. How is your expansion going? Because now you're planning to increase within Singapore and hire more bankers, about 10, I believe. And you also started in Dubai last year.
Yes.
How's that going right now?
So yes, early days for us. We started on this journey about a year back. Dubai was the first branch to be set up. We set that up. The first few months have been very encouraging. We got our license in Singapore beginning of the year. We've officially gone live only in this quarter. So the early signs are encouraging. We have a core team of senior bankers, investment specialists, compliance and operations staff that is already in play, and as we speak we are onboarding clients. We at Nuvama Private, what we are keen to offer is a fully integrated model between our mothership, which is the India franchise, and offer a global flavor or expertise through our global offices in Dubai and Singapore.
Okay, that's the corridor, Dubai, Singapore and India. I just want to quickly get a sense of the competition, because industry forecasts project India wealth firms' assets under management to double to about 2.3 trillion by 2029. There's more competition coming from domestic players, including Blackstone-backed ASK Private Wealth and 360 One WAM. How is Nuvama different from them?
Sure. And like for us, I think the opportunity exists for all our peers and competitors, because I think it again alludes to my initial statement that we are all probably trying to tap into a structural need amongst global Indian families. And I think what will differentiate players in the long run is not so much the opportunity, but the execution.
All right. Unfortunately, we're completely out of time.
Sure.
Thanks so much for joining us. I really appreciate you coming to the studio. That's Vivek Sharma, Nuvama Private. That was the discussion on Dubai, Singapore, and India. We'll come back to you for more on this on the other side of this short break. Well, we have a very interesting show lined up from the Middle East. It's Access Middle East.